Hi there guys, Paul de Klerk from Paul de Klerk and Associates. So you're trying to organize some insurances so that if something happens to you, your family's going to be okay. But there's just so much out there to choose from, right? There's life insurance, there's medical insurance, there's trauma insurance, household expenses, total disability, all of these things. But how do you choose which ones to put together? Because if you're anything like me, you probably don't have heaps and heaps of money to just throw at insurance premiums. Now, unless you have some kind of a magic wand that you can just wave and be able to afford everything, right? We need to make some decisions. But how do you choose which ones to put together and what to do unless you have all the information? So I'm going to give that to you today. I'm going to help you make sense of insurance and how it all works together. It doesn't need to be very complex, all right? I'm going to make it simple and easy. It's not like it's world peace. That's complex. Insurances can be easy. I'm going to show you how on the whiteboard. Okay, so let's just put things into context and set up how our life tends to work so we can understand where the insurances are going to fit in. Now, if you're like most people, you'll probably start your working life somewhere near age 21, right? You're out of high school, you're out of university, that phase of your life is gone. And now you start ticking along and you're getting older and older and older. At some point, we will reach the end. You know, it happens to all of us, we will die. It's just hopefully that end is not going to occur too soon in your life. That'll be a disaster. Now, we can also assume that at some point in your life you might reach the age of 65 and think about retirement, things like this. It's really this phase of your life that concerns me most. The most income producing phase of your life where you're setting things up, where you are the most vulnerable for things to go wrong. Now I'm going to assume that maybe you somewhere around here. This is not to scale, of course, but let's just say you're about 40 years old. Now we can start to quantify what do you have in terms of assets in your life? What are you trying to protect? At age 21 might not be much, but at age 40 or thereabouts, you know, you're starting to accumulate things. So let's draw a lifestyle line over here and make some assumptions. I will assume that everybody is either paying rent or paying a mortgage to be able to live in a home, have a roof over your head. You definitely are out there trying to earn an income. Maybe there's two incomes in the family, not a husband and wife or partners together. Other things in your life, you know, let's just say you've got some vehicles that you're trying to pay off. You've got some kiddies, a boy and a girl that you're also trying to raise, and that costs a lot of money. You've got some hopes and plans and dreams for the future. And I mean, that's why we're in New Zealand. So it's pretty simple stuff, right? Now, the point of insurance is that you're trying to keep that line up there as much as what you can afford. All right, insurance is meant to support you. And so we're trying to make sure that you don't end up back down here if something goes wrong and you end up back where you started. As you get older, there's limited time left to be able to recover. Now, insurances is trying to put a foundation underneath you as much as possible. And they are now ready to certain scenarios to worry about. Things like, what if you die, right? Things like, what if you get sick and now you can't work? You might be completely and totally disabled that you can't ever work. You might want to go to hospital and get some hospital treatment. Or it might be so bad that you cannot work for a very, very long time and you're trying to just make sure that the income will continue to come in. Now, those are really, as a bird's eye view, the different options available to us that we can insure ourselves for. But before we get into that, let me ask you the question. What do you feel is the most important asset in your life? As an advisor, I have my opinion. Different advisors might disagree or think about other things, but as an advisor myself, my mind always focuses on the income, because if you think it through, the income is what's paying for the whole show. It pays for the house, it pays for the car and for the kids and for the future plans. It pays for everything. And we need to make sure that the income that's coming in is more than the outflows going out. Because as my old mentor always told me, if my outflows exceed my inflows, then my upkeep is my downfall every time. So I'm assuming that we're living within our means and we're not going crazy making a lot of debt out there that we can't afford, right? Now let's just think this through. If you were to die, that would obviously be life insurance, you know, which is a fairly simple thing to imagine, you know, that you die, you get money. What else is there? Right? It's how you structure it, though, that you can save a lot of money. And we'll get into that more in other videos. Now, if you were to get sick, this is what they call trauma insurance in New Zealand. In South Africa, we might call it dreaded disease. That's the name we know it by. Now, it's really a lump sum cover. For me, it's designed that if you were to get seriously sick, like a cancer or a stroke or a heart attack or something really big like this, something that's covered by the policy, it's designed to pay out a big lump sum check. Personally, I'm trying to cover your income as much as possible. So if we assume the family income is about $100,000 a year, then we're going to see how many multiples of that can we get. So if we have cancer, $100,000 goes in the bank. Don't worry about paying or getting the income, paying for the rent. Just focus on fighting this thing. That's what it's designed to do. Now you get disabled, but I don't mean disabled to the sense that you're sucking your kuma through a straw. Right? It's disabled to the point that you could never do your own job again, right? So if you were a salesman, for example, and you worried about your voice, what if you lost your voice, right? What if your job, it depends on doing something manual and physical and you lose your eyes? You know, you get the point. Your eyes aren't coming back. So that's also designed to pay out a lump sum. Now they call this total and permanent disablement. I'm going to just call it TPD for short. It's the lingo in the industry. But again, it's designed to pay out a lump sum check. Either as many multiples of your income as possible, or you can sit and think, right, what's all my debt? If I couldn't ever work again, let's get rid of all my debt to make sure that, and then we'll think about what can we live on after that. Now, hospital, this is clearly medical insurance. Personally, I don't like the name medical insurance because it seems to give the perception that it covers anything medically related out there. But most medicals, the vast majority of ones that are affordable, would be covering hospital treatments or things associated with hospitals, right? GPs and dentists and things like this, optometrists, are not really hospital treatments. You can get those, but they can be a little bit expensive, but there are options out there. Now, cannot work, this is where your income protection comes in. So income protect. Now that works very differently to the sickness or disablement side in that it's not designed to pay you a big lump sum check, right? It's designed to keep on paying as much of your monthly income as possible for as long as you cannot work. And that period of time could be the rest of your life. Right? It could be 6 months. Whatever the case is, we've still got to pay our bills. So the income protection helps us to pay our bills during a period while we cannot work. Now, that's the bird's eye view. I die, I get seriously sick, so sick maybe that I could never work again. I've got debt to pay. I need to go to hospital to treat the cancer or whatever the disease is or the treatment that I need, or I need income protection to help keep paying my income in so I can pay the food and fuel and rent and all of these things. So there's the bird eye view of how they all work together. And now I'm going to discuss what's called the disablement process. Now, if you're anything like me, you probably don't have hundreds and hundreds of dollars to just throw at insurance premiums and to be able to get everything. So if that is the case, we need to make some choices as to where we're going to put our budget. You know, what are we going to prioritize? Now, to answer that question, I like to think of statistics, probabilities. What are the odds of one of these things happening? That could be different at different phases of our life, of course. But let's just talk about what's known as the disablement process. Here's what very often happens. You know, you're sitting at home and you suddenly feel sick, something's going wrong, and you decide you're going to your GP. Right? The GP pokes and prods and they're trying to figure out what's wrong. The diagnosis is, I don't know what's wrong with you, right? Hospital, we go, claim number one, we're going to hospital and the specialists are going to poke and prod and do their tests. Makes sense, right? Now, let's just say, yep, they find something. They find the cancer, or you've got a heart problem, or something's going wrong and now you're sick, right? Claim number two, where you can be able to get your income paid out as quickly as possible. Let's just talk about, from here on out, let's talk about cancer because everyone understands how that works. It doesn't respect age. It can happen to anyone at any age, right? But now you're getting so sick that your trauma pays out and you've got some money in the bank to help, you know, fight this thing while your income is paid. But let's just say it gets really bad now and now you physically cannot work. You don't just have the diagnosis of cancer, you now physically cannot go into work. maybe for a very long time. That is claim number 3, where the income protection is starting to pay every single month for as long as you cannot work. But some cases, things get really dicey, and you might recover, but you might never be able to do your job again because the disease has claimed something on your body that means you could never go do your own job again, right? Imagine if I lost my voice, I couldn't do my job. I know a guy who had tongue cancer and they had to cut his tongue out, and so that is permanent, and that will qualify as a total disablement claim number 4. Then after all of that happens, we might die. Now, of course, you could be hit by a bus tomorrow and just bypass all of the other issues and die up front. I mean, that's terrible. But if you're starting to think about where am I going to throw my budget at, just think of it in terms of what are the odds. Now, if you're new to New Zealand, most people would tend to go for some sort of life insurance and sickness cover while they try to orient themselves, settle into the country, and try to find out how they're going to cover themselves long term. All right, there is a budget, and I understand that we're here with South African rands, so it can get a little bit thin in terms of how we spread the budget. You've got a lot to do. So for most people, they would choose some form of life insurance and trauma insurance just to get started, settle in, and then once their residency is out of the way, they would start to look at other things. All right, guys, we're on the home stretch, so let's just do a quick summary of how this all works. If you die, some life insurance pays out to make sure that the family's income can continue to keep coming in so that they can pay for their lifestyle if you're gone. If you were to get seriously sick, like with a trauma of some sort, a cancer, a stroke, a heart attack, things like this, you can have a lump sum payout based on your income or based on whatever you like, but I base it on income to make sure that you've got enough money in the bank account that you can just focus on fighting this thing without worrying about the bills. But let's just say that you were totally and permanently disabled. You're going to live a very long time, but you could never work again. That is, again, a lump sum cover that most people, they would look at their debt and they would make sure that at least the debt will be out of the way. Then they can live off of their income protection that will continue to put money in the bank so that they can pay for their bills that are ongoing. But then as well, if we want to go to hospital, we want to get some tests and scans and surgeries, whatever that is, you can be able to have private hospital cover so that you can get the best care as quickly as possible. Now, that's really the bird's eye view. In my subsequent videos that you can scroll down and have a look some more, I'm going to do more of a deep dive into each one of these products. So if you want to find out more about each one, be sure to go have a look at those videos. But until then, I'll see you soon.